JB here. Hope everyone's doing outstanding. September 19th, 2024, 8:56 on this fine Thursday. Talk really quick about the markets, the Fed yesterday, some of the stocks I'm looking at and go from there. But what a interesting session yesterday. The Fed cut rates at half percent, which is pretty much the expectation. Markets started to rally on the news, and then once around 2:30, we started to see some selling, and then the gains reversed, and we closed in the red. I did the math. I think it was a 1.29% swing on the SPY from the top to the close. Uh, in the midst of that selling, you're like, is this going to be sell the news? And it's almost like you not that the emotions take control, but are we going to, is there going to be a big gap down today? I was almost at the point where I was going to look to add some hedge puts, but the market kind of held up into the close, and you start looking at, um, hang on, sorry. I was looking at some support, so 563. I would love to see it close there. Would have gave me a little more confidence. Uh, of course, that didn't happen, but then overnight, I guess people start to come to the realization. I had the big words this morning, and some of the headlines is that Fed Chair Powell orchestrated the soft landing, and everybody was talking about this hard landing. We have 50-year high inflation. How is the Fed gonna juggle all these moving parts in regards to making sure they don't knock the economy into recession? And you know, a year ago or so, it almost felt like the Fed was almost hoping to get a recession to kill inflation, and for them to be able to do that without wrecking the economy. As everybody's patting them on the back now, and we'll see what happens over the next two meetings. There's probably a quarter rate cut at both, but depending on what the economic data does, maybe they push that up. But at least they're in a position where they could be a little aggressive if they have to be. But pretty much his state of course, his reaction for the 0.5%, or at least his rationale, was that it was the inflation was back in line, and they felt the need to do it. Whatever. So he was able to walk that tightrope. Good stuff. Take a look at the SPY. The 569 is the upper Bollinger Band. We're gapping above that this morning at 570 here. So if we do get some chop, maybe 569 provides some support. But blue skies, I was saying at the start of the week, if things went to plan, Fed Chair Powell was able to juggle the act like he did, and be able to appease those who might have concerns that the Fed is overreacting. 570 on the SPY, and here it is. So now maybe blue sky breakout next week, pending any crazy events. You got to watch the Middle East and all the geopolitical stuff, but the market has always been able to climb the wall of worry. So 563 first, and if some reason we get some crazy reversal, that 555 area has been huge as well. All right. That's that. Take a look at small cap. Small cap futures are up nearly 3%. Well, they were up close to 3% before the jobless claim numbers came up. But I think that bodes well. It's going to hit 52-week highs. The IWM at the open. If the small caps can lead the charge for the next couple of weeks, I think that'll bode well. All right, so that's the overall market. And then we have earnings season coming up, which should be exciting. So now we kind of got the Fed out of the way. We got earnings, economic data, and now pending any crazy shenanigans, it seems like the path of least resistance is to the upside. Guys, that's overall markets. So individual names, and it seemed like the theme yesterday is a lot of names that went spiked after the 2 o'clock statement, ran up to 230, hit highs, and then reverse gains. Redfin's one of them. Broke over that 15 handle at the 220 hour or whatever, and then gave back all those gains and then some. Closed under $14. It's gapping here in the pre-market. I wouldn't be surprised to see it back over 15. Once it gets to 15 and holds that, I'll look for some more strikes to play for a move to 1760. I think 1760 is the next spot, and then in the 20s in the coming months. That's number one. Number two is ROKU. ROKU actually held the gains. It rallied to highs in the afternoon and held most of them, closed up 3%. I was looking for weekly strikes, but the premiums are kind of expensive. And then I looked out in the September 27th for next week. Didn't look as expensive on a risk reward basis. Plus, I have more time. And I figured if it's going to get to $80, maybe it doesn't get to 80 until Monday or Tuesday. And if that was the case, my spec calls would be shot. And maybe I would add next week, but instead of doing that, I added next week's. They'll probably open up over 100% at the open, I would think. So I'll look to close some of those out at the open and ride the rest. I think I'll be over $80 today. And if you start looking at the chart, I'm mid 80s to 90, and there's gap fills on 90 on ROKU. I got to pull the chart back. I'm not saying it gets there next week, but it seems like everybody's how would you put it, starting to get on board. And there's been upgrades. JP Morgan, Needham, you had that who was it, Moffett, I forget who, Needham, Wolf Research, Benchmark, Wells Fargo. It seems this month has been the upgrade month for Roku, and I think it's still playing catch up to the analysts, and I think it trades higher. All right, so that's Roku. Uh, Align, so another name, ran all the way up to 262, actually almost hit 263 at about 2:30 yesterday, and gave back all those gains to close barely in the red. I made some kind of I won't call comical remarks, but you have to start thinking as rates go down, people can spend more money. Easier money, easier ways to raise money if you need to get things done. And aligners are things that a lot of people look to do. If you don't have the cash and you use credit or whatever. So as rates go down, you got to think it's a boom for some of these discretionary products that people may not get when rates are high because they're paying more interest or whatever. And now as rates go down, so I think it just bodes well for a line. I might look for some spec calls for this week, depending on what the premiums look at the open, because I think it might trade near 265, 270 today. Well, today and tomorrow, and then I still have the October strikes, which in hindsight should have locked some of them in to cover costs when it hit highs yesterday. But looks like I'll get another chance today. If those get close to a double, I'll look to close some of my October strikes. And with Redfin, I forgot to mention. Seems like there's an article in the Wall Street Journal this morning around refinancing. It seems like everyone's probably going to be talking about it over the weekend. Should you refinance? I'm sure I'll be in everybody's local newspaper. What happens when the Fed cuts rates? What does that mean? What does that mean for someone who just got a house at highs for rates? Which it depends on how much your mortgage is, of course. And if you got 7.5%, it's down at 6.5%, and it's 1%, and you have 500,000 left on your mortgage, which means you're paying, the 1% is going to save you $5,000 a year. So divide that by 12. That's nearly, whatever is that, $410 a month in savings. But then you have to look at closing costs and all the things. All right, rants for other days on housing, but that should bode well for Redfin, especially with all the chatter over the weekend. I wouldn't be surprised to see it run a gap on Monday as well. So that's Roku, Redfin, Clear Secure still has the type Bowley setup. Another name similar to what happened with Align and Redfin, ran all the way up to multi-year highs, almost hit $34 at 2:30. Actually, it might have been closer near 3 o'clock. Yeah, 2:45, hit 33.86, and then gave it all back and then some. Closed a little bit in the red. Still like that one for 34 plus this week, and then I think 36 and change is the next target in the coming weeks. A turn. So I posted in the chat room. I put on FinTwit this morning. They finally added those November strikes. I don't know who else sent an email, but they usually don't do it the day after I send an email. But that's what happens. So that's great. It's tough to find a decent risk reward call on it right now, unless I go with more Octobers, which doesn't make sense in my opinion to do that. So I'm going to go out to November. I'll see what those strikes open up. Maybe the 15s in November as well, depending on what those look like. But happy they opened some strikes there. Turn over $10, held it. Just uh, unlike the other names, it actually held the gains. So good sign there. Hopefully it can continue its course today. That's turns. Oh, so some names I'm looking at for possible spec plays, and I keep looking at Dell. It's holding its 50-day moving average. It actually closed down yesterday, but here's a name I think might at some point is going to go on another one of its rallies like it did in the summer and in the spring, trading just south of 120. I think it trades up near 130 in the coming weeks, and then all it's going to need is a kick, another an analyst or some catalyst. I think they announced their divvy this morning. Not a big deal there. But don't be surprised if you see me add something there on Dell. I can't get this over here. And then some other names. So the biotech sector. I keep talking about the IBB. Closed down. IBB was down 0.2% yesterday. But biotech names, they tend to, especially the smaller cap names, as rates go down, these early stage companies with that need cash to fund operations and studies and things like that, they get hurt as rates go up. And some of the reason the IBB and some of the small cap bio names haven't done as well as you would think they should is because the reason they're public is to raise capital and cash, or at least to raise debt. And if you have debt at high rates, it's of course not you're going to burn through cash quicker. So anyway, so don't be surprised. I'm going to probably look over the weekend some of the smaller cap bio names. There's been a lot that have run, but get some fresh names that I think might do well. but some of the larger cap, and I still have some Gilead September 85s, which are underwater, but coming back to life. If it gets to 86 or so, I'll be solidly green. But take a look at that run on Gilead, especially since the middle of August, 72.50 all the way up to 84 and change. Uh, really like that one. Don't be surprised if I reload some calls there. And then a name like Regeneron. I mean, I used to trade this stock back when it was in the $200-300, and when there weren't many stocks over $1,000, and it sure looks like it's pulled back from 1,200 bucks, sitting here 1150. So could be a nice little bounce play. And just on a side note, and I posted a chart on FinTwit. I think it was 2014 in August. The SPY traded in a 0.2% range for like 20 minutes. It was the most insane thing. And here it is, fast forward 10 years, and the market moves like that in a matter of half a second. Another interesting thing is back in 2007, 2008, when you trade in options, there was like 3 or 4 stocks that traded that were over $100. And now, now there's most trade over $100. And then there are many stocks over $1,000. And one of the names I used to trade, CME Group, used to be one of the few stocks. I think it was $700 at the heyday of 2007, and it went all the way down to 200 or 150 after the big meltdown. And it was one of my best trades back then. And it's just funny how everything evolves, and everybody's used to seeing these stocks that are trading over $100 and $1,000. And what was the news yesterday that they're going to bring half-cent trading to who knows what that all looks like? Gosh, I remember, and bad rants because I'm going to get to the open. But I mean, it only seems like yesterday there was only monthly options. A lot of people who knew the options don't realize that the options back in the day only used to be monthly options, like they have on Turn. The third Friday of the month, every company had, you're only able to trade the monthly options, and then you had weeklies, and now you have the 0-day expirations on some of the indexes and stuff. It's just remarkable how all this has evolved over the years. Anyway, that's my rant for today. I'll be back on audio later. Let's have a great day. A rock and roll.